Good morning, and welcome to the Deal Room Live, the daily real estate deal tank powered by Titan Impact Group, a global leader in AI-driven real estate investing and funding, where the real estate world meets speed, precision, and profit. And bring us your deal so we can put it into our AI model that analyzes and structures real estate deals in minutes, generates all the docs you need to get the deal done, and gives you a verified, unbiased breakdown of due diligence report. The investors get the advantage of getting fully vetted AI-analyzed deals that cut their due diligence time down by 60%. So you're in the right place. Let's open the deal room now and get into today's opportunity.
Declared.
Good enough right there. Good.
Nice.
We're good there. We're live from New York. It's Saturday night.
Yeah.
I've always wanted to say that
Wednesday morning.
my whole life. No,
Live from
every day.
Saturday.
I'm going to start the podcast every day live from New York. It's Saturday night.
It's Thursday morning.
You guys do know that's where the Landshark Mastermind name comes from, right? Saturday Night Live?
No.
100%.
Okay, that's hilarious.
Or, you ever
Is
seen the
this
skit?
funny?
This is running. You ever seen the skit on Saturday Night Live?
No.
You gotta
Landshark?
go oh my God, you got to go look it up.
Okay, Laura, can you go
Okay.
find that skit
I'll
for
go
us?
find it.
Go find a Landshark skit on
If
Saturday Night Live.
anybody can find it, it's Laura.
They knock
I'll
on
find
the
it.
door. They go knock, knock, knock. He goes, mailman. I'm not answering the door. Knock, knock, knock. Cleaning lady. Yeah, and it was just like over and over. And finally, when they come to the door, there's literally a shark at the door and it eats them. It was during like the 1980s when Jaws was the number one movie in theaters. Was a big fake plastic machine shark eating people in the ocean on a daily basis.
That's funny.
So
All right, I just put it in the chat.
Okay, something's gone off my Facebook. It's saying it needs to be 60 days old before I can.
we are. So I appreciate everyone coming in today. I don't know who else we got in the room, but yesterday we had our
He is here.
conference meeting yesterday, and we talked about having to postpone the Scottsdale Summit. We are not canceling it. We're just postponing it, and we're going to have a discussion about a new date sometime between October and December. It's Arizona, and we don't play in the summer out here, so if we're going to have a Scottsdale Summit, it cannot be anytime Satan is in town. So we know when Satan's in town today. Do you know what the temperature today is going to be? 101.
So I call that 100 and holy crap.
Right? Anything under 100, over 100, 100.
It's 100 and holy crap.
My brother used to call them motherfuckers. He'd be like, it's 113 motherfuckers today. I was like, what happened to degrees? He's like, anything over 100 is a motherfucker. And I was like, oh, so it's 113 motherfuckers today. I'm like, oh, it's hot.
100 and holy crap.
100 and holy crap. Yep. It's not hot at this place right here. Does anybody know where this is at? This AI picture behind me?
It's hard to see it.
The way the camera is set up,
Yeah.
it seems to be zooming in on your face instead of the whole picture.
Yeah. It's set up to. It's
You
set up to
gotta
make
do
you
that
look like-
auto.
Is that New York?
I think it wants to be New York. It's definitely
Oh.
AI
Is he-
because New York doesn't have mountains behind it like that.
Can you see him?
Yes.
We're good. We still good.
Okay.
So we
So-
we might get people that barge in us today. Like it's one of those.
It's gonna be a.
We're gonna have some fun.
It's here.
So let's see. Wanted to pull up some stuff today. We're gonna talk about some deals, but the one thing was I wanted to get back to the Scottsdale Summit 2026, end of the year, October, November, December, somewhere in there. But between now and then, we are going to push hard on membership to the Landshark Mastermind. We're going to push hard on membership to the Wealthwise Women Mastermind. And we're going to push hard on getting Titan 23 front and center on raising capital. And so that's why I pulled up the whiteboard, was because I want to talk through Titan 23 on the Landshark Mastermind podcast, because you guys can't see that damn board, can you? I don't know where the lights
What
are.
board?
So I can.
We can see
see that?
it.
Oh,
Yeah.
you can see it?
Yeah.
We're good?
Yeah.
I can try to
You
You can
increase.
bring it closer.
We try to increase
If
my
you
pen.
pull it in like a
If you
foot.
pull it in closer, I think that it would be a little bit
Yeah.
more beneficial
But
if
then,
you're
okay,
allowed
I
to.
just want to make sure you guys can see
We
me.
can see you. Yeah.
Then we
we're
can't see your
watching.
boots.
We won't be able to see your boots, but that's okay.
You got to see the boots.
There you
You got to
go.
see the boots. They call me Boots.
Then just do like
Chop-
a backwards kick every now and then.
Chops my head off. I got to stand like this.
And just go like that. You're good.
Okay. Anyway, So the Titan 23, let me start over with that.
You're gonna erase it to rewrite it.
I increased the pen size. Is that better?
Oh, that's,
There we go. That's clear. Yeah.
Is that better?
yeah.
We can see better there. And it's back. Is it backwards, you guys, or does it look like
No,
English?
no, it's fine. It just keeps coming in and out of focus, but it's fine.
All right. I'll do that a lot.
Yeah.
Right. Anyway, what this is, Titan 23 is a fund of funds. This and this is why I want to talk about this, because we can talk about this in the Deal Hunter. But a fund of funds means that the investor puts money over here into Titan 23. The investor gets to pick any one of these asset classes. This is an RV park. This one is a data center. This one is actually a land holding development company, because that's what we can call that Lindstrom without the D now has a D. So Lindstrom Holding and Development, right? That's what Katya is going to become. Lindstrom hold. That's what that is.
Katya, we got to go set up your entity.
Raising caps, right?
LHD.
Raising caps. And then we've got
LSD, LHD.
LHD, right? And then over here, we've got the, what's something else we got? My brain's deading right now. What is it? Industrial, right? We've got the industrial deal. There's more deals. There's like 10 deals.
Well, yeah, the 720 acres.
Yeah, like we got
bison.
Right. Like it goes this way, right? But what this investor is able to do is he's able to shop, because we've got this set up where this investor can look at any one of these asset classes. This one is $20 million raise. We're going to raise $20 million, and they get to choose between 8% guaranteed. They can 100% get 8% every year guaranteed on their investment. The way we're able to do that is that they want, when they invest in this, instead of this becoming equity, it becomes debt. Equity pays between 12 and 22 because it's variable, right? And so this is how we've structured Titan 23 to help people grow those 7 streams of passive income, is because they can invest in any one of these asset classes and it returns a different variable every time. Now, if they want to have a steady stream that they don't have to worry about, they go right over here in the debt structure. And what they do is they invest into the RV park through a debt vehicle, and the RV park pays that debt to them every month until the 3-year, 5-year, 10-year note is up.
Debt means being the bank.
They're the
So,
bank. This is somebody that wants to be the bank. This is somebody
equity, red
right.
means dirt.
They want to gamble. They want to, can I get 12%? Can I get 22%? I'm not going to get it. I'm not going to get it right now. This comes every month. This one over here comes every year, right? So once a year, they get 12% on their investment. Let's just say their investment into the RV park was $1 million. We're going to make sure they get 120,000 at the end of the year, right? Minimum.
Any
so
questions?
are we tracking? Everybody good?
Yeah.
So with that being said, let me just jump real quick, and I want to make a better example of what all this is, so you understood what all that looks like right there. How we're going to package this, and this is what the Landshark Mastermind does. This is how this ties into Landshark Mastermind. Ready? Everyone knows Landshark Mastermind is the ultimate due diligence machine. It's called an underwriter. And what we have is we have a highly skilled underwriter that can tell us what kind of numbers we're going to look at immediately. And we can vet and validate these numbers instantaneously, where it takes teams months and weeks and months to figure out. Like, we release this to a team of underwriters. It could take them weeks, if not months, to bust through, because some of these deals, like this one especially, how long have we been busting this deal? 7 months.
Yeah.
We've been busting on the DC, on the data center deal now 7 months. We've gone through 14 underwriting teams. 14.
Wow.
Right? Because every time we underwrite it, they go, oh, what about this? What about this? And then it takes them 2 weeks to figure out the math on it. When we're sitting here and we're literally feeding these underwriters our documentation out of our Deal Hunter, right? So Deal Hunter, this is where this comes in. So Deal Hunter vets every one of these deals. These deals are brought to us by people like you guys in here. Again, this is the prime example, our shining star. Not too much pressure on you, right, Katya? You know, our shining star is this.
Not too much pressure.
Yeah, no pressure on you, Blake. A girl's whooping you right now. But Katya is the prime example. Her deal, did somebody just wow me from the audience? Back off.
No.
$30 million is where we're going with Katya's deal, right? We got to raise $30 million to get it where it needs to be, right? Katya's got a great deal. If you don't know what it is, $12 million land deal, $4 million down, no payments for 2 years, right? Skating.
And then what we're going to do with it.
And so during that time period, we're holding it. Say our holding cost is like $40,000 a month. Katya's property is going to make about $85,000 a month net off of the rentals that we're going to be getting off of there. So the cash flow to the property for 2 years is going to cover the holding costs. So that's, and we're going to profit a little bit. So that's how we're able to offer these folks right here that invest into this. We're going to offer them that 8 and 20, right? 8% guaranteed, or the 20% variable rate, right? Maybe they get 20, maybe they get 12, maybe they get 20, right? They probably get 22 on this deal because Katya has made that a home run. This is why people are going to invest in it, right? Is because of these numbers right here. How do we know we're going to get the 30 million? Because it's in an opportunity zone. We're going to actually go from I think they have it scheduled for 64 units of luxury. We're going to go to 170.
Really?
I can go up to 18 stories on that property.
Really?
They did it across the street.
Bam, 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 bam. Let's do it.
That's how you get excited right there. So the data center deal is a $50 million raise. Again, with the same returns. RV park, $25 million. Oop, I made it 28. So now we just made 3 million by my little crooked hand move. And then over here on the industrials, we're going to go, you know what? I want to change this to something that we're actually doing. We're going to go 30 million. We're going to call this, I want to go to the agricultural because I want people to get excited about that one. Like that one's going to be super exciting right there.
Yeah, we had a call with a team yesterday. They're really excited.
Is this the Buffalo Farm?
Yep.
Okay, I'm very excited about that one.
Katya's like, I want to be there the day they're born. Can I be there the day they're born?
I would love that. Is that okay with you guys?
Fine with me.
Okay.
I will not participate.
So our bison operation, that's a $30 million deal. What Titan 23 does is it covers all of the investors under what's called a 506C Reg D filing. You guys can go look this up later on, but this is an SEC filing and it's regulated under the Section D filing of the SEC on how you're able to structure stuff. There's a subsection to that, which is what this is broke down to into the A3. It's like an algebraic expression. We'll just put a line there for algebra purposes, but it's XYZ, whatever. I don't remember what the rest of the letters are, but the rest of the letters are how we're able to split this up over a debt structure and an equity structure. Does anybody have questions about the difference between debt and equity before we go into explaining capital stacks?
And again, it's good to ask questions because if you have that question, somebody else does too. So be brave.
I do have that question.
Bring it.
Can you explain the difference
So-
in like one sentence, like simple dumbed down terms?
Yep. So debt, and ready for this? Katya, do you have your Deal Hunter open right now?
Yes, I have several. So what?
You're probably like me, Deal Hunter on every device, right? You got 6 of them running? Yeah,
Yes.
That's how I operate. I do. I'm horrible at that. Like I got 6
coachable.
going all at the same time.
I actually
Anyway,
have
all right.
6 exactly. Okay.
I'm right there with you, sister. Let's go. So pop open your Deal Hunter and then make that simple prompt to Deal Hunter. Say, I have a deal where I need to have it explained to me. This is the prompt. This is the key prompt. Explain to me like I'm a 5th grader, the difference between debt and equity and how they're the same and how they're different. And if you tell it to do it like you're a 5th grader, don't be insulted when it like talks down to you a little bit.
And Katya, if you can, it'd be cool if you would share your screen and then share your sound because I would personally love to hear what it has to say.
And this
Okay.
is going to check to see if it's using my brain because I can tell you in my brain what my words might say, right? And I'd love to do that. But I think it's exciting to use the tools that we create to do this. So yeah, down at the
Okay.
bottom is a read aloud.
Goes
Oh,
to-
oh,
All the way down to
here?
the bottom. Yep,
Yeah.
right there. Click there and
Yeah.
should
Think of a house deal like buying a pizza shop with 2 buckets of money. Debt equals borrowed money. This is money you have to pay back, usually to a bank or lender. Equity, ownership money. This is money from the people who own the deal. They put money in and get a piece of the profit and value. Easy example. Let's say a property costs $100,000. You buy it with $80,000 debt from the bank, $20,000 equity from you. That means the bank is not your partner. They just want their money back plus interest. You are the owner because your equity is your ownership stake. Biggest difference, debt gets paid first, equity gets what's left. So if the property makes money, 1, pay the lender first. 2, then the owners split what's left. Super simple way to picture it. Debt equals a loan, equity equals your slice of the pie. Another kid level example. Imagine you want a lemonade stand that costs $10 to start. Your mom lends you $7. That's debt. You put in $3 of your own money. That's equity. If you make money, first pay your mom back. After that, the extra money is yours because you're the owner. Why people use both? Because equity alone can be slow. If you only use your own $100,000, you can buy one property. If you use $20,000 equity plus a loan, you may be able to control a bigger deal. That's why real estate people mix debt to make deals possible, equity to own the upside. One more important difference. Debt is safer for the lender. They get paid first. Equity is riskier for the owner. If the deal goes bad, equity can get wiped out first. In one sentence, debt is borrowed money that must be repaid. Equity is ownership money that gets the profits after the debt is paid. Real deal version. In most real estate deals, debt equals mortgage, hard money, private loan, construction loan. Equity equals your cash, partner cash, investor cash. If you want, I can explain this next using your actual deal numbers so it clicks fast.
Okay, so that's hopefully answering your question exactly. The only other caveat I can add to that is in your situation where we're dealing with investors, the investors, like she said, get paid back first on debt. That's why they get a lower return. 8% is guaranteed, but the return is low. Why? Because risk is low. Low risk, low return, right? If we fail on this, which we won't, it's not even a factor, but that's why they get 20% is because the risk is higher for them. And that if we raise 30 million, we spend 30 million, and then it's only worth 29 million, they get all this money and they get jack shit.
Okay, gotcha. That actually, the lemonade stand completely tied it together for me.
Right. Well, and again, I love that he used mom because he's like, if you got to pay your mom back first. I'm like, yeah, because if you don't, you could get an ass whooping. Like that. That's literally how that works. Always take care of the bank. If you don't take care of the bank, they will spank you. They will spank you badly and put you to bed with no dinner. So, and I've been there and I've done that. Okay. I had 10 houses that I built, and the bank that lent me the money was called Deutsche Bank. And literally they were like foreclosing on because I built 10 houses and never sold a house. 18 months, not one builder sold a house in 18 months in the state of Florida, 2008, 2010. So like we ended up 2008 selling the last house in October, then sell another one until almost December of 2010. It's crazy. So I had 10 houses sitting in the middle of a subdivision that didn't go nowhere, didn't get sold. And so what ended up happening was we did what was called deed in lieu of foreclosure, but the bank just let the property sit there, right? And so just before I went to sign off that I was deed in lieu of foreclosure, we got notified that the houses had what was called Chinese drywall in them, and it turned into black mold. And we got a huge insurance check that covered the money that I owed the bank. So I literally signed the check, and it went right over to the bank and all gone.
Nice.
100% all gone. No foreclosures. So, and then I actually was able to get a contract to go back out there and demolish my own houses.
Wow.
With a hazmat team, and I made enough money to pay off 2 of my investors. We closed out that deal, and the house went back to the farmer that we bought it from on owner financing. And it grew houses eventually. We were just down there in Florida, drove through it. Remember my eyeballs driving through there? I'm like, oh, look, my baby. Like I literally felt like I had a baby, gave it up for adoption, then got to go back and see when it was all grown up. So I was like, oh,
That's funny.
that was cool. Anyway, understand debt equity. Now let's talk about capital stacking. So capital stacking is, we know that Katya's project is going to cost more than $30 million. What this $30 million does is gets us to the next level. How much do we need to begin with, Katya?
So can I just say
4.
something really quick?
Wait, who's talking?
You said 4.
Right. Go ahead.
Really quick. When we were watching the Shark Tank thing in Colorado, the way that the laundromat deal was done, where they literally had blocks stacked, I thought that was the most brilliant visual for understanding debt stacking, or capital stacking.
Yeah,
so
and so
I don't know if you could do that.
I'll pull that together like that. So let me watch this. I'll pull that over here. Get out of here. Stop it. I don't know what I just did. Move your ass over here. Thank you. So
And really quick, Kyle is on here and he was scheduled for a 9:30 with you.
Kyle is on here for 9:30. What's up, Kyle? How we doing?
Good. How are you guys?
Awesome. What's let's see, starts in 8 minutes. And Kyle's with Fractional. We met Fractional while we were out there in
Super excited about this.
Colorado, and they got an amazing Kyle is probably the one that needs to be drawing these boxes, because this is how this works, right? So we'll get into this, okay? So in a development situation, right? Green don't work too well. In a development situation, you got your land, you got your entitlements, you got your vertical, and you got your finish. And this is basically how you structure a property deal. This is as basic as it gets. Is basic. This is how it kind of falls out. And each one of these has a price tag along the way. So when we go over here, each one having a price tag, we got to raise capital for each section of this going up as well, right? And so this one right here, the land usually is going to be a creative deal or private money, or whatever, because this is the basis. And so if we go through and price this out real quick, let me do that. We're going to say, we'll just, for the sake of argument, make it cheap. 100K. I'm going to go up to $1 million with it. So we'll do this at 600K and then 200K, right? Making this $1 million deal, because I'm going to build a capital stack for a $1 million deal, right? So for our capital stack for $1 million deal, I need 100K for the land, 100K to get entitlements. Entitlements are documents, permits, blueprints, whatever, water, access, sewer,
But
all the
that's
stuff.
what increases the value of the land.
Increases the value of the land. I'm going to break down what that looks like over here percentage wise. But when you buy land here, so if our deal's $1 million, land is only going to be between 10 and 15% of that total, right? At most 15%. When you do entitlements, it goes to 30% to 60% now, right? Depending on what you're building. Your vertical is going to be 30 to 40%. This is how you end up going over and getting more in value, because again, our cost to build is 1 million. So our percentages are going to be over 100. Like people are like, you can't do more than 100%. Yeah, you can. This is called profit. This is called margin. This is how you build margin, right? So if it costs us 600 to build it, on the vertical side, we better increase this by 30 to 40%. And then our finishes actually are where you make a lot of your margin. Again, you should be getting 40 to 60% over here. If we tally these up, you got 110. So this is a 10% margin build right here. And this over here, 60, 60, 40. That's 120. Let me back up. 175.
75.
So I got 175%, which means I have a 75% margin. Anybody have questions about how I did that?
Is everybody clear?
Thumbs up if we got it, right? And so now you understand how we're able to make profits over here. Now you can understand what we got to do to get our capital stack taken care of, because all these people are going to need to get more money than we need over here, right? So if I'm at 110% margin, these people can't make any money. So all this better be my own money, right? If I'm going to make 175% margin, I need to pick out of here that I'm good with making 25% of that margin, and I'm going to feed the other 50% to my investors, to my bankers, to my whatever. It'd be nice if I could flip it, right? But just for the sake of making sure I'm staying conservative, I'm going to give everyone this and be happy with taking that, right?
So does everybody understand why we would technically take less of the profit? Does anybody not understand why it's not flipped? I just want to be clear that you're all understanding the psychology behind this.
Because again, if there's not enough meat on the bone for everyone to eat, they won't come to the table anymore.
Yeah.
And
you
I'd
always
rather
take
do-
care of the money.
I'm going to do, if I can do 10 deals at 25, that's better than doing 2 deals at 50.
And you guys, this is the same as being 100% owner in one deal or being a small percentage owner in hundreds of deals.
Margins are where it's
Right?
at.
Like we're a small percentage owner and this is one of hundreds of deals.
Right.
So it's totally worth it for us.
So to get creative with this, if I need 100K for the land, I can either do a private money loan or creative finance, right? If I need the entitlements done, I'm also going to include this into the private money loan, or ready for this, Hoy Is Hoy in here today?
Not yet.
Hoy
No.
has credit cards that are 0% interest. And so what you can do is you can pay $5,000 to get a 0% interest credit card that you use to pay for all your entitlement work. $100,000 0% interest loan for 18 months.
Nice.
Free money. Cost you $5,000 to get one, right? So you can do that. So we'll put over here a CC loan, right? On your vertical, this is where you're going to get a construction loan, okay? And this is where it's going to go up. Where you're going to get this is definitely an institutional loan, or in the case of Titan 23, we're going to do equity. And what we're going to sell this individual is we're going to sell this individual 70% of this $1 million investment, right? Because why? I'm getting a huge profit margin to cover them. Okay. And this is where fractional comes in, is because their program, their platform allows us to make these offerings to people that are not accredited. Titan 23 only does accredited investors. Fractional allows us to go with friends and family, go with smaller contributions,
So that people can
so
get
that
up to the
people can
accredited
start
investor.
getting into these types of investments, these types of deals. There's been millionaires made over Robinhood, for example.
Yeah.
Like, because people can now go on and do stock trading simply and easily. They've been able to do amazing with it because smart people can do stuff like that, right? But the platforms were what were the holdback. And now that we have the platforms in check, like, that's where to be. So we're going to jump over and start talking with our guest here now, because I think we're right there at the spot.
Yeah.
But as far as capital stacking goes, you can see here how I find different sources to get the money covered. When I
Yeah.
get to the 200, I can use it from here, or in the 200, what I'll do is I might sell it. Like over here, what I might do is find the buyer. And what the buyer's going to do is he's going to hand me an offer for 175% more, which is 1.75 million. Like, so this buyer is going to hand me 1.75 million from his down payment. I'm going to come in and do the finish work, because I'm going to let him pick the tile. I'm going to let him pick the color of the wall paint. What kind of roof shingles do you want on it? Blah, blah, blah. The finished stuff, right? They don't get to pick the structure because they like what I already built. They like the layout. They like the beds, blah, 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 right? So this is my capital stack. My friends and family, my credit. I got a bank involved. And then I was able to pull the buyer to the table, built up a capital
Is this
stack.
helpful what he just drew out for you? You understand the full capital stack. So when they're saying capital stack, this is what it means. You get that, right? Was this helpful?
Yes, definitely. And I'm excited to play around with it a little more. I took notes, so I'm gonna.
And
Yeah.
was it helpful to
Deep
see it in a
dive.
diagram like this, like
Yes.
blocks?
And
Yeah.
so again, this is just a basic custom home capital stack. When you put this over into Katya's deal is the same thing. It's land, $4 million, entitlements, $2 million. The vertical on Katya is going to be about $150 million. Come on, Katya, let's get to work. Right. And then
Katya's first deal.
And then the finish is going to be, again, if we're using our percentages and going through it, our finishes and stuff, this will probably be closer to $120 million there. So you got 4, 6, and then these two is 270, 276. Let's just call it $275 million deal. If we're doing, ready for this, let's do some math. Who's got a calculator?
Here we go.
100. I said how many doors? 170.
Yeah, you said 170.
We got 170 doors, right?
Right.
And we're selling these. They're going to cash flow. Let's just say we're going to get $7,500 a month per door. Do the
Okay.
math real quick.
1,275,000.
So 1.2, and that's per month,
Uh-huh.
right? Times 12,
12.
right?
So that's 15.3.
15.3.
Yeah.
Okay, so now take that. Big numbers, right? These are tough numbers to play with now. What we want to do is see what our cap rate is. If our value now is at 275 million, Katya, go to Deal Hunter and say, I've got I want to know if my income is how much did we say it was? 13 million?
15.
15.3.
15 million. 15. If my income NOI is 15.3 and I want a 7 cap, what is the value of my building?
Hold on. Are you ready to dictate?
Sure, ready to go.
Go.
I've got a $15.3 million NOI on a building, and I want to have a 7 cap, and an 8 cap. Give me the value of that building at that price, please.
Amora's here.
Hi, everyone.
You want to share your screen,
How
Katya?
did it land, Katya?
Yes, yes, I'm getting there right now. So at a 7% cap rate. Oh, that's it. Okay.
So our cap rate at 8%, 8% cap rate has our value at 191. Here's what we're trying to reach, 275.
Yeah.
So on a 7 cap is 218. So this is going to be probably like around a 3 cap. That's probably more normal for do a 3 cap, and I bet that's what it is, because that's what Grant Cardone's trading on at the industrial at the current multifamily rate. He's getting 3%.
That's nuts.
Is
So
our
they'll do-
plan to hold it and then sell it to a developer, or is your plan-
Opportunity zone.
So
We'll
it's
get
to
a developer
build.
to do it. Right.
Okay,
Well, we're selling the plans to a developer, but we got to make it make sense to him, right?
gotcha.
So
Mhm.
if you do that same deal, if you tell it you got a three cap now and change it to a 3 cap, see where that comes. We're going to jump into this talk with Kyle here in a minute, but I want to see the 3 cap. Because I know I came up with this value based on a different lineage, but I always validate my numbers. I redo the math another direction just to make sure I know where I'm coming from. So let's see what it says for the 3 cap.
510 million.
510 million. Boom. Right. So now it makes sense because it's guaranteed income. Remember, low return because of what? Very low risk. Luxury apartments, people do not vacate those. Right. Like they get on a waiting list to freaking move in there. Right.
Especially for that area. in
God, for that area.
particular.
It's right next to the river.
Yeah, Katya, you're going to have to come and stay at the Bell Hotel and come see it.
It's freaking ridiculous.
That
Anyway,
would be
all right,
so
Okay.
cool. Okay, sounds good.
let's jump over and talk to Kyle about fractional. Let's let him share his screen, whatever he wants to do. He's carte blanche.
Thank you, Kyle, for being here.
Of course, it's great to be here. Nice to meet all of you. Maura and I have spoken plenty of times, but I got to meet Tommy at Squad Up, so we started chatting a little bit. So yeah, so with fractional, what we are is, Tommy was talking about 506Cs, what you're doing with that. We're completely not completely the opposite, but we cut through all the red tape of going that route and allow people to work with unaccredited investors. So an investment club it's not a syndication or a fund. Where it's similar to a fund is you're raising capital based off of, a business plan or a criteria. Now with us, because we're not a syndication or a fund, there's no need to file paperwork for PPMs, create 506Bs, do everything that is normally involved, any outrageous upfront costs. You can start raising capital basically right away, and there doesn't even need to be a deal under contract. So basically the way it would work is, the club would form based on the business plan, and then your network would join in with you based on, what you're looking to accomplish with the general business plan or criteria. Where it is a little bit different, I'm not sure how familiar all of you are with funds, but there is going to be a voting process. So as soon as a property is brought back, the investors or the club members are going to vote as a group that they agree that it fits the criteria, and that as a group they want to move forward with the opportunity. The reason the voting happens is that's active participation, and that's why we're not a security. So there's no need to file with the SEC. And that also allows anyone to invest in the investment club. They can be accredited. They don't have to be. So anyone can invest.
Do we have to have a pre-existing relationship?
So it is your network. So it's, people that like and trust, but you can bring in people. So like people do run, paid ads. You can't run it directly to your club, but you can bring it to your brand or,
Right.
if you have a website or a social media page. Once they're in there and they're warm, that's when you can talk about the investment club, what it's doing, when you're going to be launching it, how to join the investment club, everything.
So like we could put Katya's deal in here and all our membership could invest inside of Katya's deal, right?
Yes, as long as it's not currently going into a fund or anything like that.
Right.
The fund of fund model, which Tommy was talking about earlier, doesn't work with an investment club. But yes, if you have, a network that you're raising the capital for, sorry, go ahead.
Can they be set up simultaneously?
Like multiple clubs?
No. So like, can we raise capital through Titan 23, which is for accredited investors, and then also have a fractional club for the same property?
Not for the same property, because if it's going into a fund, then unfortunately that's the fund of fund model, which doesn't work with an investment club.
So it's one
But
or the other.
Yeah, well, but it's not one or the other because we have plenty of club leaders that are running funds as well as clubs
No, I,
because,
I just mean like per deal, it's one or
Right.
the other.
oh, yeah. So it would
Okay.
have to
Because
be separate from the funds.
we have an A-vestor fund,
I have a fund to fund structure.
fund to
with
fund
investor.
structure with A-vestor, where we're able to put a portfolio together. Like you've seen, we demonstrated here with our portfolio, we're raising funds individually. The investors get to choose which fund they want to go into and
Yeah.
into which bracket they want to go into. The other thing we have is we're going to be creating a marketplace of SPVs for qualified opportunity funds, which are the Opportunity Zone Program funds. So we're going to be nesting several opportunities for investors to come in, whether it's through capital gains, accredited investors, or even non-accredited investors. And that's why we're interested in working with fractional.
Yeah.
And
Yeah.
then
And like,
Kyle, can I just ask a question too?
yeah.
I got to talk to April, and I feel like we understand more how we get kind of paid or whatever for the work that we do. And so she was saying it's like she has a separate LLC. Her group is separate, and they work in partnership with this investment club. And then so she's not a part of the investment club. She doesn't have a vote in that part, but her company is in partnership, and that's how she makes her money. Is that correct?
Yep. So basically, the way most people do it is they have their LLC hold title, or they're the ones being the borrower or lender. And then you have either a joint venture agreement or a promissory note with the fractional club. So, we have people, if you go the debt route, we have people that are interest arbitraging. So lending out at, 15%, offering the club 12%. So they're keeping 3% as the club leader. Or if it's an equity split, you could say, hey, 70-30, and you're keeping 30% for being the leader, focusing on, everything with the club.
Got
But
it.
yeah,
Right.
And then we can do as many fractionals as we want, right?
yep.
Can you
And you
go over
can
the
raise,
costs? Oh, go ahead. I'm
yeah.
sorry.
Oh no, you could. So I cut you off. I apologize. So you can raise a club for one singular asset. You can also raise a club for multiple assets. So, and this, I'm just using random numbers, but say a project is $250,000. Instead of 250, you could raise 1 million and do 4 opportunities within the same club. Or you can raise $1 million to go to one particular asset. So there are open options when it comes to the club. And then as far as pricing, the only pricing or charge as a club leader is a flat $3,500 annual fee for all the back end work, because we also take care of all taxes, distributions, K1s for the club leaders as well as setting up the LLC, handling all the movement of money. We do an identity verification on everyone. And we also have the former senior counsel of the SEC on our team. So we handle all the legal and compliance as well. So for all the back end work, taxes, distributions, K1s, it's a flat $3,500 annual fee as long as the club is alive. The first year's annual fee is due up front as a setup fee. That's for us to just build everything out for you, make sure everything is legal compliant, get you ready. But then, like I said, it is directly applied to the first year's annual fee. The only other charge is the investors pay a 3% transaction fee based off their contribution.
Okay. I like
And
that.
sometimes you with some, like for an example, the one I'm in with April, she's like actually paying us back that fee as a part of whatever the earnings. Are there any other fees on like what we make and stuff like that?
No, and typically, I can't remember when did April's club launch? Do you remember?
January.
January? Okay. Yeah, so you would just have to set it up. Typically, the investors are paying the percentage just because, it's the cost of doing business with you. But, there are options, obviously.
And then we would also set up the learning and stuff like that because I know that's a part of a lot of people's clubs. But I mean, there's already this container of the mastermind, so that could just be a part of it, and we could have like a
Right.
special
And that's
session
what
for investors.
that's what I was kind of like leaning into, was wanting to ask, because is it possible that we could create a fractional for the Landshark Mastermind as our group, and then use the investment of that to go and do, say, just the entitlements? Because a lot of times that money for entitlements is the hardest to source. And so if
Yeah.
we had a fund that just, it was a fund that could be used to just do entitlements. We vote, do we want to do entitlements on this property? Yay. Then we move forward, we fund it. Is that kind of how we could structure that up?
100%. You could totally do that. So your
And
club
then once we get to
criteria.
entitlements, because you've seen on entitlements, that's where the most gains are too, right? Like when we get through entitlements, the property value goes up 60 to 70%. And that's the best time for me as a developer. That's the best time for me to exit because I make the most return, right? So at that point, we could probably just have a fund for Landshark that covers those entitlement costs. It produces, and they're exited by the Titan 23, for example. Titan 23 comes in, exits the entitlement fund or the Landshark fractional fund, and the Landshark fractional fund is exited by Titan 23 every time.
Yep, that could totally work. So basically,
That
you would
makes it
just
clean.
set whatever your term is for, when you plan on Titan 23 buying out or when you plan on refining them out of the club. So yeah, you could raise for the land entitlement, and then your club business plan would be, hey, we're we're focusing on land entitlement. These are the types of opportunities, XYZ, just what the general plan is. And then all you have to do is say, hey, I found 123 Main Street. Do we want to do, loan this land entitlement to that? And then the money would be deployed to it. And then whatever you decide, however you want to dissolve the club, whether it be Titan 23 buying it out or refining, however you do that, that's totally acceptable as long as it's just not going into.
Would there need to be a new club established every time we put money on a deal?
How often are your deals coming? Like how
I want to do about 12 deals in a year.
Okay. So the only thing with that is you can do multiple for the same club. So you can
Right.
have clubs, for each individual one. You can do one for multiple, but you'll just want to make sure that you'll be able to deploy that money in a timely manner, just
Right.
because if that money's sitting in a bank account, unfortunately it's not doing anything.
No,
So you
right.
could raise a club, like, again, say, and land entitlement is $250,000, just random example again.
Right.
You could raise 750 and say, hey, we're going to do 3 of these projects or more, but you'll just want to make sure that you can present those opportunities so that money is deployed in a timely manner. That's all.
No, yeah. And again, like these deals would be presented in a very timely manner, like, because yeah, once that property goes under contract, we're looking to spend entitlement money almost immediately.
Okay.
So, but we know that we want to make sure that we have the property secured. And a lot of times the bank won't give us the money until we're 100%. Oh my God, Catherine sees a bug. Time out. Time out. Life has to stop. There's a grasshopper in front of Catherine. You see her moving, right? Look at her running. Look at her running.
And then I think
I gotta
so.
go. Hold on. I'll be right back.
Oh, sorry.
Gotta go.
April
save
was
money
saying
for
like the important
grasshopper.
thing is us like
So it's a
flipping.
grasshopper. See, it's a
Oh
grasshopper.
my God. We don't need to see it. We don't need to see it, Tommy.
I ate it.
Oh.
I ate it. It's
Take-
never coming back.
Ew, take it outside.
Disgusting. Okay.
Thank you.
So April was saying like it's also important that we keep flipping the money because that's how like she kind of gets paid. That's how we kind of get paid. So we
Right,
have
Yeah,
and
to
it-
keep.
love that.
That setup is the key. Like when we were talking to these guys yesterday, as a matter of fact, with the 700 acres, I got them in tune or touched with a lender who can do their cannabis operation. And what we end up with is the other 600 plus acres that need entitlement work, right? And so we can't get the money for the land and the entitlement at the same time. So this would be a perfect project for that to happen. And then what we would do is we would stack that pipeline with these types of projects to the point that we need $1 million right now for it. And as the funds come in, it can be satisfied because we only need them in like $50,000 to $100,000 tranches. We don't need them in $1 million tranche, right? So we could do 10, 20, 30 million, 10, 20, $30,000 payments out to get entitlements done as these investors put their money in. But how does that work with the voting then?
So sorry, could you repeat that one more time?
So let's say I got this property where we do want to raise the capital for the entitlements, but they haven't put their money in yet. How do they vote on it? Do they vote on it after the money comes in?
So basically what would happen is they would join your club. They would pay the 3% commitment, the 3% hard transaction fee to hold their spot in your club.
Got it.
Once your club hits its goal, that's when we collect all the money. We open a bank account in the LLC's name that we create, and then that money is sitting in that bank account ready to deploy. So as soon as you present an opportunity, they vote yes, money's deployed wherever it needs to go.
So yeah, I don't want to put the cart before the horse. So we should really focus on trying to raise capital for the Landshark Entitlement Fund and
Yes,
then start presenting deals after we raise a certain
Correct.
amount of capital.
Got it.
Yes. Correct.
you can do it the other way too, where if you have a project in mind, you can say, you know, here's the club, here's our first potential opportunity. So if
Right.
you do have something you want to focus on, that is an option, but you don't have to. So you can raise the capital and then present the opportunities.
Right. Yeah. No,
So
we
Kyle,
actually, go ahead.
no, so I was talking to Dustin, just about like, do you know like the percentage? Like, hey, we invite this many people. We need to invite 200 people to kind of get 50 people in it. Like, do you know those numbers? Because like Dustin was like, just making sure that you're inviting enough people or doing the little webinars with enough people, because the percentage that actually commit, like, do you know those percentages? Do you guys have like data on like, as you've looked across clubs,
I
how many
mean,
people do we need to like present this to? And
that is hard because it also depends on what you set your minimum investment. So if you're looking to raise $1 million and you set your minimum to 25, you're going to need a decent amount of people. So you're going to want that outreach. I don't know the percentage. I would say at least from, you know, because it's their own network. So I don't get to see how many people they reach out to versus, but like I would say for like Zoom registrations for calls, I would say about 30% show up. So like however many people you invite, 30% show up, give or take. Some people just forget, some people get busy. So it just depends. But like Brittany Arneson on our platform ran a deal for a boutique hotel, and she raised $1.4 million and only had 13 people, or no, 8 people in her club. So it just depends on the check size, what you think people would, you know, be willing to invest. And then that's kind of where you'll want to think about, okay, how many more people should I invest? Because like if you're getting, you know, talking to people and they want to put down 25,000, you know, and then your goal's $1 million, you're going to say like, okay, I'm going to need to reach out to a lot of people because that might be the normal.
and the minimum for fractional is 10,000.
Yes, but there can only be 99 or less people in the club. So that's where you also want to think about your minimum as well, just to be realistic.
So if our minimum is 10,000 and we wanted to raise $1 million, we can't technically do it.
You could raise $990,000.
Right. Well, if our goal was the $1 million, we could only take 99 people. So we're only ever going to be able to raise the 999.
No, but some of them can give 25,000. Some can give
Yeah.
40,000. Like people can
okay,
can
okay.
invest
I see.
different
Yeah, no,
amounts.
I see
It's
what
just
you're
the
saying. I see what
minimum
you're
is
saying.
10,000.
You got to do the numbers of how much you want to raise.
Yeah.
inside
And we've even had people like, hey, for the first 24 hours, the minimum's, you know, $10,000. After that, we're going to
Just to get
bump
it
it up
started.
to 25.
Okay.
Right.
Yeah.
No, that's a great incentive as well. That's called a discount, I think, in the capital world. The other thing is, are you guys able to do bonus? Because we do bonus on some of our equity shares when we do the 506D. Like we do a 20% bonus, meaning we give 1.2 share for a 1 share price.
So you can't give away anything that's monetized. So you
Right.
can give away, you know, things like, hey, you'll get a free class to my mastermind or something
Coaching,
like
like
that.
someone like April did
Yeah.
coaching. Like I'll do one-on-one coaching for the first, like if you do 50,000. And she also had like a retreat or some
Okay.
type of like
Got it.
in-person meeting
But we
for
can't do
like
anything that,
people
when you say
who
we
did
can't
a
do
certain
anything
amount
that's
of.
monetized, does that mean
You
like if
can't
we
give away.
sell coaching, we can't give coaching away?
No, you
You
can.
can give coaching
You
away
can
as a perk, but you can't say like, hey, if this property performs better, like I'm going to
You get
give
more.
the people that
Got
put
it.
in XYZ more money, or you
do
can't
that.
do like a waterfall payment. So if someone
Got
puts
it.
in
Got it.
250
Okay. Yep.
versus
All right. No,
50,
that makes sense. That
they
makes
just
sense.
have to be given the same thing.
No, I think from the standpoint where we're at, we definitely are going to look at starting a group for Landshark Mastermind, raising I think $1 million is plenty. Like 500 is actually where we should be with it, but I think $1 million would be plenty. And then it becomes kind of like a rolling account where, because Titan 23 should be able to buy out and close those within 6 to 12 months,
Yeah.
right?
Right.
So
And
we could, so if we had $1 million in there and it started lending it out, it's going to lend it between $100,000 and $300,000. And as we get rolling, each one of these is going to go up for a vote. Hey, we're going to vote on the RV park getting done, $300,000. Everybody says yes. We deploy within 9 months. That money is going to be back in there,
Right.
right? And that'll pay back the investors. Can we go over the million? If we say, for example, we want to
Yeah.
raise $1 million and it goes up to 4 million, is that?
well, that's what I
Pace
was
did
going to
that. Pace
recommend.
went over. Yeah.
Yeah, so you can oversubscribe. The one thing that we recommend though is starting at the lowest number that you know you can move forward with. The reasoning behind that is it creates a better story for you. It looks like you're knocking it out of the park.
Right.
And then
Okay.
you can oversubscribe. So say you hit 500,000 in the first week, you could say, man, we've had such great interest. We're going to go for 750 now and open up more
Okay.
spots. It creates a better story for you. It also creates FOMO and urgency for the investors. Cause like if you're looking to raise 500,000 and you get to 250, you're already at 50% to your goal. People are going to have to act quickly. But if you set your goal to $1 million and you get to 250, you're only at 25%. Investors may see that and be like, oh, I have plenty of
Like,
time.
I don't want to get in that. Okay,
Yeah.
this is
Right.
perfect.
They want to wait until when it hits 90%. That's when they want to dance.
Exactly.
So,
So we just see a better story with that. I was actually going to share my screen with you. Unfortunately, I just got a new MacBook and I have to restart to let it share my screen for some reason. But I
Well,
can
give me
send
don't-
examples.
I'm trying so hard to not say
Don't
nothing.
don't. Anyway, keep going, Kyle.
But yes, so basically, Brandon Brittingham did a simple debt club. So he raised 800,000 to lend to short-term loans, and basically is just rinsing and repeating that money. So he set a 2-year commitment to his club, and he said, "Hey, these are the types of properties we're going to look at." He actually, when he raised the club, he came and said, "Hey, okay, I found 5 properties. These are the ones I want to loan to. Here's why," and then basically, like that money was deployed. As soon as it comes back, he just presents another opportunity. Money's redeployed.
I like it. Yeah. Because
Oh,
again, a lot
this
of times
works.
we're in a holding pattern with it. Like Katya's property is going to be a 2-year hold, right? And so being able to get operating capital for that real quick, set up, start cash flowing, and then paying it back is very important. Because Titan 23 will raise the 30 million for it, but we got to get the entitlements done prior to. It is literally the yoke between the horse and the cart. Fractional can be very useful for us in that way. It's a part of the capital stack for sure. It's a great product. So Kyle, thank you so much for coming in, sharing with us about it.
Yeah, this is awesome.
Thank you,
We
Kyle.
want to
Of course,
we
and
want
I'll
to thank
send.
Amor for bringing that, making that connection as well. Go ahead.
Of course, yeah. I'll send you and Tommy and Amor some more information, and then if you just
Okay,
want to
perfect.
forward that to the team, they can have all that information that I'll send as well. Some
Sounds
examples.
perfect.
Yeah,
Thank you.
I see this being a couple of things for us. Definitely going to be an entitlement fund that we can establish. But I heard something else in there that triggered another thought, which was like the rural housing. We've talked about this so many times that banks do not lend to rural housing. If it's out like 5 miles outside of
If it's a secondary or tertiary market. they're
yeah,
not
they
gonna
don't
do it.
even touch it. And there's like so much rural property available out there right now to lend
So-
on. It's ridiculous. So
Kyle, if you could do me a favor and also include me in that email as well.
Yeah, can
Um,
you drop your email in the chat?
Yeah, it's just Catherine at Titan Impact Group.
Oh, okay, perfect. Yeah, I will shoot
And
you
Tracy
that
just
as well.
joined.
Oh yeah, and I have
Yeah.
Tracy's email.
Yeah,
So,
you
yes.
have Tracy. You can just send it to Tracy
Yep,
as
to
well.
all
And if
of
not,
us.
I'll forward it to all people who need it.
yeah, I
Okay.
think it's going to be important for us to do that. And what we'll probably do as a club is everybody that wants to partake in this, because they have deals, we should probably put up $500 a piece. We get 7 of us to crank it up and crank out the club. We can get that money back. From my understanding, we can take
We
that
pull
back
in all
out
our
of
networks.
once we start raising. Correct? We get reimbursement and fund. Can we how does the fund structure work? Is it only investable or into the property, nothing reimbursement?
How do you mean?
So like on a Reg D, we can get reimbursed for the lawyer fees. Like when the investor pays to to invest in our Reg D, we can take out our fees for how much it costs to raise the capital, all of our marketing, advertising, and we call it management fee.
Yeah, so that would just be, what I was talking earlier with Amor about, you setting what you want to keep. So basically, there's not like a management fee, but if you're, say you're, just a lending club, you're lending out at 15%, you can target for the club 10%. So then you're keeping 5% for yourself,
Got it.
basically as a manager.
So that's how we could structure it up. Because again, like between those two general funds that I thought of right there, the entitlement one and the rural housing, I think those two are very strong. Can definitely have a good amount of return and stuff. So
I have a question for Kyle.
Oh, you're gonna drive it through?
Kyle, I got a question for you real quick.
I think this will actually be fun. We're gonna have a little surprise drive through.
Well, we're gonna end the show and we'll just let them drive through. I'm gonna move. They want to move the TV and stuff.
We're
done with the
stream
show.
this. Yeah.
But we'll keep it live streaming so you guys can see this. But Kyle, we thank you. They want to, because we're podcast live today from a exotic car place. If you can't see behind me here, there's some exotic cars everywhere. So we'll get to watch these guys move some stuff around today. So it's been fun playing around, but it's going to get loud and it's going to get crowded. So I got to move this TV. Everyone, thank you. We'll see everybody tomorrow.
This is fun.
Tracy, I can answer your question.
Okay, so my question was, I was having a hard time wrapping my head around the structure because I have to be all compliant and I'm the stickler there. So what I came to understand is that we would form another entity, and that would be the management entity that the club could pay, correct?
Yeah, so that's typically how it is. There's your LLC would hold title or whatever, or be the borrower or the lender, and then you would have a joint venture agreement with the club level or the fractional club that we create, or a promissory note if you go the debt.
Okay, so that was the little bit of information that I was lacking in our last conversation. I'm like wrapping my mind around, how do we stay compliant and still get paid? I'm like, okay, you got to have another entity. So I get it now.
Awesome. Cool. Well, I will send this all out to you. If there's any additional questions, just feel free. That's my personal email, so you can reach out.
Thanks, Kyle.
Awesome. Thank you all.
Can't hear you, Catherine.
How's that?
Okay,
so
now
y'all
what?
get to see the fun car.
It was
I'm
loud.
trying to see if it's blurry.
One driving through.
It was a
Oh yeah,
Ferrari.
you got to stand by the car over there. So
Yeah. The further you go back, the clearer it is.
plus it's entertaining. So
This is the office we all get to work out of. So whenever y'all
Nice.
come to stay at the Bell Hotel, this is where
this
you'll
is
come
Maddie,
be working with us.
this is Maddie, my young investor apprentice. She started today.
Yay!
Hi.
I love it.
So we were
awesome.
late to the deal room, but I figured this would be good for her.
We
Super
talked
happy
about
to- so-
capital stack, and the nice thing is you guys can go and check it out on the YouTube channel. We're going to start getting those up on a regular basis now.
So one of the
So-
things that Tracy, this is again catching up on all the things. Her and one of her other partners have started an internship program with college students. Funny enough.
Nice.
So Katya, Blake, they're a part of ours. So we want to talk about like what that 12-week program and stuff is with all the things. But I know we've got another call we got to get on. Do you want to end this?
Yeah, thank everyone coming in today. Let's wrap it up with a prayer. Heavenly Father, we thank you for the blessing of this day, the blessing of this life, and the blessing of all the things that you're able to provide for us in this world. And we ask that you continue to bless and guide us, and so that we can do your son's will, through your son's name. Amen.
Amen.
Amen. Thank
You
you.
all are amazing. Thank you.
All right, yeah,
Yes, I'll
connect me
circle
with
back around
Katya.
because I want to, talk about that. Okay, you guys, you're awesome. Super excited about getting this fractional set up so we can all invest. Start talking to all your college friends. This is a way they can all start actually like generating passive streams of income now. Hello.
I think that the college groups could probably start their own group.
They could.
We'll foster it with them.
Yeah.
When we have our networking finale for the financial literacy group that I created, I think it's going to be end of summer. I would love for you guys to fly out and then
Yes.
discuss it with the group, because I'm sure
Where are
a
you?
lot of them would be extremely interested.
She's
Where
in
are you?
California. I already spoke with her
California.
group. Yeah.
Oh, bummer. I hate going to California.
Oh no.
It's a hop for me. So
I'm
you do
kidding.
the East Coast, I'll do the West Coast.
I'm in Oklahoma. I'm happy to fly anywhere.
What part of Oklahoma?
Well, I'm in Edmond.
Got it. I have family in Yukon.
Oh, nice. It's about 30 minutes from here.
Genius.
Not too far
Love it.
away.
Because I don't.
So yeah, so we'll probably sponsor the fractional, and then you guys can sponsor it, and then we'll raise all the capital, specifically for literally college students. That would be really freaking cool.
And their group gets the benefit of the profit.
Yeah, you guys get the benefit of the profit.
And I'd say
Obviously,
our
all the
group
college
now, with
students.
everybody who's been, I'd say we have about 60 to 70 people.
If they all did social media posts,
It's
about
grown.
us,
It's been really cool to see.
It would be ridiculous. So come join our college, financial group and learn in the Landshark Mastermind how we're going to make it.
We can barely hear Tommy.
Because he took the thing off.
No, I'm just brainstorming because again, for me, it's like if we can get 60 college kids to post on social media once a day about this, like that's what they call organic traffic. And
This
so
is the new Robin Hood.
you can
Yeah.
literally tell them, come over, join our financial club. It meets every day, 9 to 10 o'clock every day on a podcast, learn stuff. I mean, honestly, if you guys learn something,
Yeah,
give me
I
a
would.
thumbs up.
Yeah, that's a great idea. We need to start
So-
promoting it now. So we're gonna put together a whole campaign, and that phone number that I had you all call, Tommy is having one set up specifically for this. So we're gonna have these AI agents be able to talk to people about all of this, and then schedule calls with us. Keep inviting people to this podcast
Right.
every single day.
So
We'll
yeah,
create some campaigns and
Landshark-
things for you to share.
Landshark covers every one of
I'm
these
gonna
asset
change
classes.
my Facebook profile thing.
Yeah, Landshark's catching land investors, multifamily investors, industrial investors,
Yeah.
office investors, single family rental. Like
This is
all
what,
these things.
yeah. So just a thought, it would be really cool if you could create some just images so that
Yeah.
we could actually, like, one for Katya, one for Blake, one for Tracy if she wants, so that we're inviting people to this, because if you guys seriously want to be a part of
Yeah, if you
creating
send
this
me
fractional fund.
an image of you, what I'll do is I'll put
Yeah.
together like one of my little cute postcards that I do.
Yeah.
And it'll say, come join the Landshark Investor Group, and
That'd
how
be
to join
awesome.
it, how to be a
And
part
we
of it.
change all of our banners and profiles to be that and be promoting it, because the more people we get into this, the sooner we can get funding different deals.
Is there already
Absolutely.
social media made for Landshark, such as an Instagram or YouTube?
I'm
So
gonna make it today.
we're using currently all of Catherine's social media
Yeah.
for it. So anything Catherine already has Landshark on it. If you go to Catherine's Instagram, it's Landshark. If you go to her Facebook, it's Landshark. If you go to her YouTube, it's Landshark.
So just point everybody to
Yeah,
me.
all the content's already there. We can start building out the
I
new,
think we should build
yeah,
out a land
like
shark.
we can start building out a brand. So
I
anybody
can do
wanting to
that.
step up and jump on that, like hop to it. And then let me know, because I use Opus clips. I can start pushing stuff over to that channel, and we can start building that channel doing that as well.
I think we need to.
Right. But I want to continue to build your channel, and we can go and build the other channel.
Yeah, and I want to build the band. So
Yeah.
Landshark Mastermind is the band.
Blake, you open your mouth too soon, buddy. You're in charge of setting up all the new Landshark Mastermind accounts.
It sounds
All
interesting
social
to me.
media.
I mean, I'm all for that. So I just want to see if
Look
it's
it up.
paid or if that just needs to be
Let me get it created, and then Blake, I'll add you as the
Let him
admin
create
and do
it, and we'll send him a logo.
Well, no, it has to be created under my name, and then he does it. It just trust me on this piece, please.
I do. We've got 47 Facebook accounts with
Yeah.
your name on it. That is
Blake, I'll get it all hooked up to you today, and you get to have fun. Give me 10 minutes.
Sounds
We'll work on it.
wonderful. No worries.
We'll have a meeting about it, Blake. Appreciate you.
That'll be
Everyone
great.
have a great day.
Bye, guys.